Market news now. Shares in Asia retreated as investors positioned themselves for an action-packed week, including the release of U.S. consumer price data that may confirm that the inflation battle isn't over, dashing hopes of a Federal Reserve rate pivot. Meanwhile, locally, financial watchdog, the Financial Sector Conduct Authority, has officially decided to cancel Stock Exchange's ZARX license with immediate effect after the alternative bourse failed to allay liquidity and capital adequacy concerns. The decision to cancel the exchange's license was taken together with the Prudential Authority and given the go-ahead by the South African Reserve Bank. ZARX began operating in 2017. At the time, the bourse was positioned as an alternative to Africa's largest stock exchange, the Johannesburg Stock Exchange. Well, to talk to us about some of the market dynamics and what we can prepare for going into the week, we are joined by Bright Khumalo from Investec Asset Management. Bright, thank you so much for your time. So, depending on, which market, media you're looking for when you're looking at business news, there are analysts who are saying, where's the peak in yields? Where is the peak in inflation? Are we seeing a trough in the economy? And I'm wondering from your perspective whether you're seeing any signs that this is not a bear market trap, given the pullback we've seen the past couple of days.
I don't know about a bear market trap much, but what I can tell you is that, sentiment is slowly changing for all the reasons that you've mentioned. I mean, we had an exceptional, start of the year in terms of, as returns are concerned. I mean, 4 weeks of double-digit growth, who wouldn't like that? But now there's some concern that, inflation data, maybe that's going to be released tomorrow, is going to be a little toasty. In other words, that hotter than one would consider, ideal, which is what's going on here. That's what you're referring to at the intro. So I don't know, but what's going to be driving markets going forward is, unfortunately, these short-term sort of economic numbers. And obviously things like consumer confidence and obviously the retail numbers to see and gauge where the consumer is in relation of inflation are really feeling inflation to a point where we stop consuming or we're still consuming more because the increase in wages is still offsetting the pain that we're seeing in inflation. So that's what's sort of going to drive markets for the next 10 to 18 months.
Speaking of those CPI expectations, we had that jobs report that, showed that the U.S. economy may just yet miss a recession. But at the same time, it puts the Fed in a policy conundrum. From the commentary that's come out of the FOMC or even the Fed chair, has it been convincing enough? Are you buying into what they are saying versus what the market is expecting?
Well, they're all singing from the same hymn sheet, basically. These are the Fed officials saying that, we mustn't expect any rates cuts, this year as market participants, because from what they're reading and what we're talking about right now, you and I, is that inflation actually hasn't cooled off. So on that front, they haven't been inconsistent like they did when they said, inflation was transitory. So I guess we'll take their word for it right now. They're not blinking. They're all saying they're even thinking of, considering even higher, considering continuing to increase rates. That's what I was looking for. So yes, I wouldn't want to fight the Fed on that front.
Earlier today on SENS, we saw a trading update from Curro, and I just wanted to unpack this one. I mean, you almost got the sense that it was maligned by the market. They had to change strategy, and some analysts are hoping that we might start seeing earnings growth over time as this company starts to, exhaust its existing assets, as opposed to the aggressive expansions that we saw in the previous years. What's your conviction on Curro?
So the problem with Curro is that, it's always been an expensive stock, and market expectations are always on the higher end for a company that's expected to grow, double digits into infinity with, double digits PE as well. So unfortunately for those few times, a couple of, half-year numbers and full-year numbers we've seen in the past, they haven't delivered according to these high expectations. That's sort of like, what happens when you're a market darling. But these numbers are showing that, enrollment is up 3.5%, learners to 72,835, and as a result, headline earnings of, between 25.9% to 45.5% is definitely, heading in the right direction for a company where, like I said, market participants expect very highly of. I think they have a lot going for them. Number one, they're showing that, the demand for their product is still very much inelastic. And as an actual fact, parents are choosing private schooling because the alternative is very inferior. And especially if you look at something like, the number of, pupils in a class, you're talking about 45 to 50 students as compared to a max of 25 at Cairo. So that makes sense. But yeah, I mean, we know that, parents would cut off many of, of the discretionary spend before cutting things like school fees. So it makes sense that, they see increase in the, pupils enrolling.
Right, Bright, we've run out of time. I would have loved to unpack the SA-listed property sector, especially in an environment of high inflation and high interest rates, and whether you were seeing any value or in this particular sector. But we'll leave that conversation for another time. But that is Bright Khumalo from Investec Asset Management. As we alluded to in the intro, tomorrow we have US CPI data. We'll unpack what that means in terms of a policy conundrum for the Fed. Will it come out as economists are expecting hotter than expected, given the fact that they've had to reevaluate the way that they put that CPI basket together? But we'll unpack all of that for you. We're going to take a quick break. When we come back, we'll have Nzinga Xinta with you until 3 p.m.